That is the best question, and it's the one that gives us the most agita or the most angst, right? So
Mhm.
the because there's not really enough education, just like how we're talking about, there were different playbooks for people that want to get into the investment property ball game. There's also not enough education. They only know one thing: rate. What's your rate? They may know what's your rate and what's your fee, right? Origination fee or
Mhm.
something like that. So that's the only thing they know to ask on, and and um, and it's not the right question. The deeper question, what you want to try and work with, is what are you trying to do, and let's figure out how that makes the most sense, right?
Welcome back to the Massive Passive Cash Flow Podcast. I'm Gary Wilson, your host. I'm so glad to have you back listening to the show or watching in recorded mode if you're able to do that on YouTube, LinkedIn, Facebook, you name it. Welcome back to the show. We got a great guest today, Aaron Marsh from the Panhandle of Florida. We're going to talk about lending for investing. And this is not your traditional, Wells Fargo, PNC, Bank of America type stuff. So this is designed for investors. And you're gonna really enjoy this. If you're driving, we'll have show notes for you. If you're not driving, I suggest you take notes. So, in any case, first thing, Aaron, thanks for doing this, man. I really appreciate you joining us for the podcast. Mm,
Hey, thank you so much. I appreciate you bringing me on.
You got it. Hey, it's always good to. By the way, I didn't mention this before, but Florida, even though I'm not there now, is actually still my state of residence. So
There you
I
go.
go between here, Florida, Virginia, and Pennsylvania. Right now, I'm in Pennsylvania. But hopefully by the fall I'll be back down there, flip flops and board shorts.
Yeah,
So
there you go. Yeah.
yeah. Hey, if you wouldn't mind, I always like to give people a little bit of backstory because most of us weren't born saying we're going to do something with real estate. We wanted to be, astronauts and cops and stuff like that. But what was it? If you can take us back, what was it that got you into real estate to begin with, and then we can go into the lending practice. Mm.
So I was kind of introduced to it at an early age. My grandmother was, I'm going to date myself, but way back in the 70s, she was a realtor for a big firm in Dallas, and so she got my mom into it, and so I would ride with them, and that's back before internet or anything else. So whenever there was a contract or something like that, they would literally have to drive to the buyer's house and get all the contracts signed, then take the contracts in the car and drive over to the seller's house and then get it all signed and then go to the title. So there was a lot of that kind of stuff going on nights and weekends, when I was much younger. Then I went through, all of the things. So, elementary school, high school, college. And then when I got out of college, and I was gonna make it big on Wall Street. So I did that, the broker and analyst for about 2 years, and that was 80-hour weeks. And I was like, whoa, I gotta get a regular job and do something,
Yeah.
And so
Mhm.
anyway, so I kind of grew up through and spent a lot of time in corporate America, right? So I was in finance and operations for a long time in corporate America, had some
Mhm.
really cool profile jobs, got to travel the world, do a lot of cool stuff with that. And then we transitioned into, coming out of COVID at home and all that kind of stuff. And I said, well, I want to get back into the real estate game. And so I joined up with a family friend who did, had a boutique firm. And so
Mhm.
he said, go take the classes, take the test. And so I did that to be a loan officer, an MLO. And I wasn't actually going to get business. I was just doing refinances when the rates crushed down to, the 2, 3 point range, and
Mhm.
from our family and friends. And then, so coming out of that, I said, hey, look, I can go back into the office and do a ton of stuff like that. Or let's just take this, let's figure out everything that I learned from a leadership, operational, financial standpoint and all of my corporate background, and then put that into, the kind of lending wholesale market game. And I had a lot of connections already. And so it was just a natural dovetail. And then that just kind of launched us into where we are now.
Nice. Um, right. So you're in the Panhandle, and for a long time it's been a great place to invest, as well as north of Georgia, Alabama, and until the west a little bit Mississippi. we've actually had a lot more luck in Alabama in the last couple of years
Mhm.
than, I mean, Georgia, like everybody knows about Georgia, everybody knows about Florida, but it's like Alabama, it's, I guess the word's starting to get out. But
Yeah.
if you look at literally from where the Gulf Coast is all the way up to Huntsville, just amazing. Um, but for somebody who's looking to invest down there, um, how do they like? Do you have a network of people you work with, like inspectors, contractors, agents, things like title companies? I mean, I used to do that. I did the same thing, but it was just in my one area. I didn't have a national team like I had now, but want to paint
Yeah.
a picture for us about what actually it is you're doing today, how you're serving people. Mhm.
Yeah. And so when we first started, I just really took the first 6 to 12 months and just curated an entire, what I used to call is like the glass pipeline. So I know where everything is all the way through the process. So from, early in funnel, first talking to a lead or a client or a realtor who may have a lead that they're showing properties to or something like that, all the way through until closing, right? And then post closing, the whole referral process, keeping contact, CRM, that kind of piece. But everywhere along the line, I didn't want any kind of blind spots. I just want to keep it in this glass pipeline so we could see it. And during that process, we had to curate a bunch of lenders. So instead of me just going, "Hey, I want to partner with your bank or partner with your bank. Do you guys have agreements with that? How does that work?" We kind of looked and took a step back because we were getting leads from all different places, like fix and flip guys, ground up construction guys, first time investors that want to try and put their toe into the water with like just one condo and start there, right? Mixed use commercial property people, multifamily, right? So we started scouring the marketplace and trying to figure out, where can I cubby some of these? So we have fix and flip. So if anybody comes to us with fix and flip, we have 2 or 3 guys over here or, lenders that we do really well with. And then the same thing with ground up construction. And ground up construction can get a little tricky too, because a lot of banks don't want to do it from a spec home basis, right? And there's a lot of investors that do it as spec home. And so they kind of go into 3 buckets. Like, so it's, a true spec home where it's just build to sell, right? So we bought the lot as an investor. We hired a GC. We're building it, and during that pre-build or that build process, we're going to pre-sell this house. So once it's ready to go, it's gone, right? Or you do build to rent. I'm an investor. Instead of buying something that's turnkey that I might have to do some work to, or it's not really in the location that I wanted, that's optimal, I'm going to build it and then I'm just going to rent it, right? And just run it as a business. And then the third is ground up construction for a primary or secondary home, right? So those are totally different loans than the business purpose investor loans, right? And so we got people for each of those things. And then on our bigger commercial development deals, we've now started to really work with some family office groups and some private equity guys and capital raisers that handle a ton of that stuff with us. So
Yeah,
that's really kind of what we looked at. We just said, okay, we're just not going to be, bank JV. We're going to be actually, in the market, in the marketplace and working that way.
excellent. Okay. Now, I mean, I know you're located in Panhandle, Florida, but you can lend to people that, like, there's different, I guess, different types of loans for different projects, but in some of the neighboring states like Alabama, even jumping over to Texas and places like that. So what are your primary states? And then uh, what about the people who are building and say up in Oklahoma and Colorado and places like that?
Yeah, no, that's a good question. So we're a full service brokerage in Texas, Alabama, and Florida, and then we do commercial and investment business purpose loans in 38 states. And when I say business purpose loan, it could be a multitude of things, right? It's just basically you're closing in an LLC. You're going to treat it as a business. You're going to take advantage of all the new tax bill stuff. And so that could be just a single family residence. So we have clients here that have bought a house on the beach and then they bought a house in the mountains in Colorado, and we did both transactions. Or they have a house up there and then they wanted to use the equity out of that house to buy a house on the beach, even though they live in, say, Nashville, so we just do a lot of that stuff too.
Awesome. Okay. Let's take an example. Who let's just take Panhandle or Florida or Alabama, so places where
Mhm.
you're the primary lender. Um, what's your typical avatar? Like I like dentists, for example. For some reason, I've always had a lot of work with them. They're well trained, not just as dentists, but I think the Dental Association must be one of the best associations out there for training their professionals how to operate a business. I mean, they're just really good. But is there a certain demographic or social graphic that tends to be drawn to where you are and what you're doing? Mm.
Yeah, we do have that's really good, and it's perfect timing because I kind of challenged our market team to come up with what we call our ICP, or our ideal client profile, right? And so
Mhm.
we kind of work through a lot of that in late fourth quarter, early first quarter, and then how do we kind of move on those things instead of marketing to everyone? That means you market to no one. So we're really kind of
Mhm.
identifying, targeting those. So we have three or four different ICPs. One of them is just the true property investor, right? Someone who has a portfolio of homes in a lot of different areas, and then that's their business, right? So that
Mhm.
we target those people. We also have just signed on with a couple of large physician agencies and physician groups where, a lot of times, especially like for the newer physicians that are fresh out of school, they're saddled with a ton of debt. They're just getting going, those kind of things. So we have special programs that help them. Then a lot of them, they want to offset, some of their income with an investment property. So we really target the physicians really well. And then there's a lot of physicians that, may have, partnered in on an exit strategy with a PE group, and now they're just W-2 earners, right? So now they get a W-2 check, but how do I offset a lot of this high income? And so we partner with them with kind of strategies and work with their CPAs and tax strategists to come up with investment, ideas. And then we have curated the best realtors here in this area, and then some in Southern Florida, in terms of trying to find the best, most ideal properties that fit their needs. And so those are kind of three of the big ones. And then I think our third one is we do really well with is the kind of serial entrepreneurs, or large self-employed people, because I always use one of our clients as an example. He has 17 LLCs. So for him to come into a traditional bank and go, "Hey, I'm going to buy this condo or this house on the beach in Florida,"
Mhm.
and boom, here's like this stack of paperwork. Here's all my tax returns. Here's all the. That's almost a no
Right.
from a bank, or you just go into an underwriting dungeon that you never get out of. So
Right.
we use a lot of the loans and strategies that we have to help those people get through underwriting faster, quicker. We kind of grease the wheels just to make sure that they get to their end game, which is getting the property.
Yeah. Well, I love it. I like the fact that people have an alternative out there as opposed to going to the mainstream banks. I'm not going to name them. I used to work for one of them, but they have silos. And two challenges with traditional bank funding is a silo, like they'd have a silo for single family up to 500,000, and another silo for 500,000, 2.5 million, and another silo for rentals up to 4 units. You get it. I mean, so one of those silos becomes full. They stop making loans for properties in that silo, and the people in the front line of the bank, they have no idea why it got turned down. They just say we're just the bank's not going to make that loan. That's one
Right.
challenge. The other challenge is the people, the actual borrowers, like you just described, somebody like me who's got multiple businesses and multiple LLCs for ownership. I walk in there, I don't fit what we call the profile. They have profiles of different borrowers. And if you don't fit, they're not going to try to jam the round peg into the square hole. You're toast. So
Yeah.
this was an awesome opportunity. Can
Yeah.
you talk a little bit about that? Like why do so many investors struggle to access funding, even when you can see that clearly they got strong assets? Mm.
Yeah. I think. Exactly like what you said. If you don't fit into one of these 5 or 6 programs, then you're out. And so then now they see this unique opportunity. It may be the perfect property as a short-term rental or possibly a building for a long-term rental, like a duplex building or something like that. And they can't get access to that capital to do it, right? And so that's when they would come to someone like us, where we have like a whole marketplace and a multitude of avenues to go. So we don't have 5 programs; we may have 50 programs, right? But that's where we're kind of working with you, giving you the white glove, treatment, saying, okay, what are you trying to do with this property? How much money do you want to put down? Are you trying to keep a lot in your cash reserves because you're trying to go after other deals, right? So you want minimal down payment, you want the best interest rates that are available, and you want clean underwriting. So then we start working with those and say, okay, here's all the things that we can fit into that box. And this is and then we give you 2 or 3 options that we believe are the best curated for your ideal project goal. And then we just work together with you to help, make that happen.
Gotcha. You know what? I want to kind of go back to the basics with borrowers too. Maybe I should have asked this question earlier, but it'll make sense now. What are some of the biggest misconceptions that borrowers have, about real estate financing today?
I think the biggest one is they don't have access to the playbook. So people like you, which are really kind of getting out to the masses on, hey, here's a playbook. There's a playbook out there that a lot of people that don't understand. Just like our family, like before I got into the business, we would come visit, this place where we're at now and rent a house out for the whole weekend. And then we drive home the 12 hours back to Dallas and go and start thinking about, well, how can we afford that? We got this, it won't fit under our DTIs, or, how do we do this as a regular bank loan? And a lot of people just get stuck there, right? Or they may actually inquire with the realtor, say they went to an open house while they were on vacation, and the realtor said, hey, here's this bank, that bank. And they start to talk to the bank, and the bank goes, well, how much money, what's your debt look like now? Well, we own a house and 2 cars, and we got some student debt, those kind of things. And really, there's an entire playbook that's outside of that where we don't look at that kind of stuff. I mean, I'm sure a lot of your investors and your listeners are used to, terms like the DSCR loans or the no income loans. Just letting the market value and the property rents qualify that. And that keeps a lot of your personal stuff out of the transaction. And so, but there's asset portfolios. We do a lot of combo, kind of what I call the income layer cake. So maybe they, it doesn't quite get there on a DSCR, but they have like a large like Schwab account that they can use as just backfill, right? Just to qualify and check the note. Not saying you got to liquidate your Schwab account, but you layer that on top with the DSCR. A lot of banks don't get creative on stuff like that.
Want to learn what's working right now in real estate? Then don't miss Monday Night Live, happening every Monday at 7 p.m. Eastern. Each week, we bring you expert training on real estate investing, agent attraction, lead generation, marketing, and AI-powered strategies to help you work smarter and scale faster. You'll also hear inspiring success stories and lessons learned from some of the most successful real estate leaders and investors in the industry. Whether you're a brand new agent, a seasoned investor, or building a high-performing team, there's something valuable for you every single week. Learn, network, grow. Registration is completely free. Simply visit globalinvestoragent.com to reserve your seat for an upcoming Monday Night Live session. Join us this Monday at 7 p.m. Eastern Standard Time and discover strategies you can put to work right away. We can't wait to see you there.
Yeah, I know that they're not creative at all.
And I'm not trying to promote Schwab. It could be like Fidelity or Prudential, whoever, right? I'm just using it as an example.
That's okay. I've used Schwab, I've used Fidelity, and now I've used Vanguard in the past, but now my grandson, I'm getting his set up with Vanguard. He just turned 1. He doesn't know anything about it, but he will in 18 years.
Well, you're starting them out the right way, right? That whole compound interest. There you go.
That's it, man. Yeah, give him a head start. I'm absolutely teach him how to fish kind of a guy, and that's just been my life. But I also know this, and I've just been observing other wealthy families, particularly families that are foreign nationals, and they'll send their kids to go to school. And what they'll do is they'll buy a condo or a single family duplex, fourplex, whatever, for their child to live in and rent out the other spaces to other students, right? And that's basically the carrot. So if the child goes through and finishes graduation, I'm not suggesting everybody do this, but I know some of those families, That's the graduation present for the kid. They get
Yeah.
the like. I mean,
And
what
then
a yeah.
I agree 100% with what you're saying. And then they can go back and they can go visit the campus or go to football games. They got a place to stay if they wanted to, that kind
Yep.
of. But I'm seeing, and I don't know if you've had other guests on talking about this, but there is really a huge push. So there's the whole coastal mountain lake kind of resort community as short-term rentals or long-term rentals. But then also there's a huge push in college towns. So specifically certain college towns that are those colleges are really growing in enrollment. There's a lot of people that are going in and investing in duplexes, smaller houses, buying existing rentals and taking those over. And, just like what you said, they buy it for their kid. Their kid's going to live in it for 3 years with his, roommates, and they're going to help pay for the mortgage. And then, like you said, then turn the keys over to him, let him run it afterwards or her.
Yeah. Yeah. I actually, with my kids, and I'm going to move back to the show in a second, but actually, when they were born, I started, well, back then it was, I think UTA, something like that. Then they came out with a 529C. I did that. And I thought, you know what? I'm just going to buy a duplex, and build an LLC in their name, then eventually they'll get that. And that's what I did. So college was pretty much paid for by the time now the college costs went way up higher, more than the rental rates went up. I can tell you that for sure.
Right.
But man, what a huge advantage we had.
Right.
Back to the banks. I mean, I love that part of the discussion because I used to work for a bank. Right now, they're not sure what's happening with interest rates. First they're being told we're going to have rate drops, and inflation kicks in. We got a new Fed chairman coming in. So what should people understand or try to understand about today's rate environment? You can even compare it to what it was like for you and I when we first got started, because it's totally different.
Yeah. That is the best question, and it's the one that gives us the most agita or the most angst, right? So because there's not really enough education, just like how we're talking about, there were different playbooks for people that want to get into the investment property ball game. There's also not enough education. They only know one thing: rate. What's your rate? They may know what's your rate and what's your fee, right? Origination fee or something like that. So that's the only thing they know to ask on, and it's not the right question. The deeper question, what you want to try and work with is what are you trying to do, and let's figure out how that makes the most sense, right? And so a lot of times, people will start rate shopping. All right, I put a contract on this house on Friday. Monday morning I'm contacting like the 5 banks and get the best rate, right? But what does that mean, right? Are there hidden fees at a bank? So yeah, a bank may say we're going to give it to you at 5.99, but then your APR is like 7.29, right? And you're like, well, how did I get there, right? And that's really what I'm paying, not the 5.99. And the other thing is, what did it cost to get that rate? Did you have, a loan officer, or a banker, somebody may be quoting you a rate, but it's not the right answer because did you have to pay points to get there? Did you have to put more down payment down? Does that make sense? How much is the big difference in the true, monthly payment? So one of the things that we talk about is we walk them through that little discussion. Then we also say, if you're going to, compare us, just make sure you compare us apples to apples, or at least apples to oranges. A lot of times it's apples to dump trucks. They're just totally different, right? And so, and in terms of like rate, the thing that I get, a lot of questions on is like, hey, I think we're going to hold out on the rate because we heard the new Fed chair, or rates are going to come down, or there's going to be a hit to rate or something like that. And well, if you've heard it, the lenders and the wholesale market are 6 weeks ahead of you, right? So they've already built that into their current rate, and it's kind of like back when I was in stocks as an analyst. So it's like, you're betting the rumor and then you sell the truth, right? So what happens is, if they say, hey, rates are going to come down, they're looking at a quarter Fed cut on the 15th. Well, people are like, okay, we're going to wait on the 15th because we're going to get that. Well, the rate's already baked in. And a lot of
Right.
times, if they think it's going to be a half and it only comes in to be a quarter, the rate that you're at actually goes up. And then all of our clients, all of our leads, all start calling us, going freaking out about, I thought rates are going down. Why are your rates going up? You're a terrible lender. No, no,
Yeah.
you had
Yeah.
it baked in, and we should have locked at that point, right? And
Right.
now rates are gone up, even though the news says they've come down, but they just didn't come down far enough, right? That the
Right.
so
Right.
um,
Yeah.
in terms of like the current market, we're on the wholesale side, so our rates go up and down every day, sometimes multiple times a day. Now they're just little small ticks, right?
Right.
Um,
Mhm.
but we do have that ability to get at some lower rate loans. A lot of lenders are offering promos right now that we work with, so they're like, there's no discount fee or points off of, we're going to give you for the next 2 weeks 1 point off for 12 months or something
Mhm.
like that. You also get into arms if you're going to bet that. So there's some really good ARM rates on investment products right now that we're offering. And
Mhm.
that will, if you think rates are going to lower, maybe not this year, but next year, that could be a great product for you to get into, those kind of things.
Yeah. Yeah. When I first started investing, my first property was January of '86. And, rates weren't, 18 and 20% like they were 5 years before, but they were still up there pretty high. And
Yeah.
we've assumed the guy's first mortgage. It was a VA mortgage. He was in the Navy. We refinanced his second. He had a 13% second mortgage. We refinanced that. I think we got like 11 or something. And then we gave him a third note for the remaining equity. That was my first experience. But, just the thing is creative purchasing, it's been around for forever. I mean, all the stuff that we all learn, that wasn't new. That came from people that were doing it in the '70s and '80s, and
Right.
those guys got it from people doing it in the '50s and '60s. You
Right.
know, you can find these books out there to go back and like, well, this stuff's been around forever.
Yeah.
Let me ask you this: I like what you guys are doing and the way you're doing it a lot, and I'm sure, like me, it's the relationship is the most important thing. If you nail that and you serve people correctly and
Mhm.
really dig into them, their projects, it's like you've got a long term uh, business relationship where both people profit. So what does that look like for you on the lender side? I've always been on the broker side, but what is I guess they call it the ideal strong partnership. What does a strong partnership look like between a borrower and a lender?
Yeah, I think a lot of it is just built on, clear communications up front and a lot of
Mhm.
trust, right? And so, right now there's a third party that's getting put into that, and it's
Mhm.
AI chat, right? And
Mhm.
so chat it's a constant iterative process. So
Mhm.
you're a borrower. You come to us and say, "Hey, I'm going to buy this house. It's $1 million. I'm going to put 25% down, so I need a 75% LTV loan. And what can we do from either a DSCR standpoint, a 12-month bank statement standpoint? How do we limit underwriting and what we do?" So we'll come. I'll give you a rate stack. I'll say, "Hey, here's kind of par, and then here's these." And one thing that we always do is we're really clear about, here's the P&I difference, because a lot of people get hung up on rate. They're like 6.75. That's ridiculous, right? And I go,
Yeah.
"Okay, well, what do you want?" Right? You tell me what you want and look at it. Well, what does 6.125 look like? I go, "Well, it looks like this. And based on your loan amount, it's only about a $40 a month difference, but it's going to cost you
Mhm.
18 grand to get there." Just
Right.
using, so now you're looking
Mhm.
at like a payout period of 9 years or 10 or whatever it is, right? So we kind of help people, that gets them off of the rate thing. But what I was saying about that third part is every time I do that, I give them some really good guidance. Here's two or three
Mhm.
options. Invariably, everybody has access to AI chat now. And so they just screen grab whatever I gave them. They throw it in their
Mhm.
chat and go, "Is there a better deal?"
Okay.
Well, that's the wrong prompt. Like, let me write the prompt. If I can write the prompt for you, then you'll see that, hey, this is a pretty good deal because we've already done all that back work. But because you just wrote, "Is there a better deal?" then chat's always going to say yes, right? There's always a constant race to the bottom in terms of like if you're only asking it for rate or just
Yeah.
P, right? But you're not asking all the right questions on how do I get there. And so
Yeah.
it may tell you, you may be wanting to do this house that you want to buy in an LLC, and it may say, well, you need to go conventional conforming over here, and you're going to pay less down payment in this and this, but you can't close it in an LLC, and you can't use it as a business purpose loan. So that doesn't even make sense, right? And so a lot of people will come back, and we can see those chat response answers, but kind of getting at that, we really build a rapport. We really kind of walk through, and and like I tell everybody, and this is one of the things that kind of attracts a lot of realtors to us too, and brokers as referral partners, is like, hey, I don't care if you're at Wells Fargo or Community Bank or somewhere else, and you have the deal going. If your clients have a question or they don't understand something and they can't get that call center on the phone, give me a call. Even though that we're not even part of the deal, we're making nothing on the deal, we're not even in it at all, I'll walk them through and educate them and try and answer their questions as best we can. And because that does two things. One, that de-stresses the anxiety for the realtor, and they're like, hey, Aaron's really kind of helping us out and add value here. Two, it gets them to closing, even though we didn't use the bank, but they know that we helped them get there. And so they're more apt to add us, at least at the bottom of their list next time. Hey, make sure you call Aaron because he's really good. That kind of stuff.
Yeah. Awesome. Well, I'll tell you what, I knew this was going to go fast. So how can people learn more about your program, your business, excuse me, in the area, and also how you can help them, whether they're in Alabama, Florida, Texas, or even one of the other states where you can do the other type of lending. I wrote down marshlending.com. Is that correct?
Yeah, marshlending.com is our website. And you'll get a lot of good information there. You can send, like, we have a good email response from our email inbox at hello@marshlending.com. And then all of our socials have good content on it. Those are all at Marsh Lending. And then really, if you want to understand investing, property management, the real estate side, the investor side, the whole 360 view of acquiring and maintaining an investment property, we have a YouTube channel out there that last year we filmed this entire panel series on all of those kind of questions. So, you could watch the full 18-minute video, or you could watch, 2 or 3 minute just based on one question, like how to pick the right property or what makes it a good investment property, those kind of things. So,
okay. That's YouTube. Is the YouTube channel also Marsh Lending? Excellent. Okay. I think you said also you've got a playbook out there for people that they can grab, the people watching the videos, right?
Yeah. So if you contact us, we have an investor playbook that we can send you. So if you contact us at hello@marshlending.com, then we can send that to you.
Excellent. Well, listen, Aaron, I really appreciate this, man. And one of these days, hopefully I'll get down there again. And I've got friends and colleagues in your neck of the woods. And I think that neighborhood you mentioned earlier, I won't mention it here on the air, but I think one of them has a place there. We've had some meetings there in the past. It had a really unique name. I just can't think of what the name of it was. But in any case, I'm sure we'll be in touch. But I appreciate you doing this. And for the listeners, Aaron and I both appreciate you listening or watching, if that's what you're doing in recorded mode. Please leave a review. Your reviews make our world go around. And take care of yourselves. God bless you and all your loved ones. And we will see you on the next Massive Passive Absolute podcast.
Thanks for listening to this episode of Massive Passive Cash Flow. Be sure to go to realestatewithgarywilson.com to join our community and start building wealth today.